Good morning and welcome to the Early Bird. And we've started trading US stock CFDs on the Nasdaq, and that's going well. And added a few more there as well. And we'll look at adding some New York stocks there later this week. Also, just want to point out that we'll be starting some ASX options trading, and perhaps next week or later this week we'll be bringing in a specialist for that. His name is Lawrence, and I'm not an options man, but Lawrence is a good one, and you're welcome to communicate with him directly, and we'll also be putting out strategies pretty much in line with our own thinking on the local markets. So anyway, we look forward to that. This chart here is the S&P 1000. Normally we look at the S&P 500, but this is the 1000, and just pointing out that the 5000 level here is finding resistance there as well. And yeah, so the next step would be to see the 48 here, the first minor level, find resistance there. That will take a little while, as the Dow Jones is now at the medium level. If we look at the Dow Jones, we can just come to this chart here. So this is the Dow Jones on a 4-hour chart. That's the 11,500 there. It's the medium level. And as you can see, that it was resistance at this stage, and this is the first high above the level, and now it's checking for support. So our Elliott wave count suggests that these lows down here will be taken out, and that's what we're trading for. But we also understand that we need confirmation on things as well. We are getting it in terms of the structure here to the downside, which is good, but we need to see the 11,500 here become the resistance. Then we would see that 11,500 is support has been broken, and we need time for it to develop there. Now, as we mentioned when we were up here further, that we would get a bounce off here, and we should do. Just take a little bit of time, but we also need to understand that we're in a third wave of a third wave. So that means that all of this structure that's coming down through here is basically wave one, and this is wave two here, and then we've got down for wave one, back for wave two. Well, on the cash that would read back to wave two there, down for wave one, back for wave two, because that high wasn't as high there as it was on the cash, it was lower. So a series of third waves unfolding. There's about 12 degrees that we use in Elliott to as a micro macro fractal situation. So but what we're looking at here is a bit messy down through here, is we're looking for 5 waves down here. It's a little bit clear on the S&P 500, and we'll have a look at that. But basically, we were looking at 5 waves coming down through to here, and then a 3-wave counter trend coming back up through here. Now, the counter trend can come back up to 61.8% of this move down through here. But we'll see how we go with that, and it's more important to actually count the structure as it moves up. There will be a 5-3-5 structure, but it still sort of bothers me a little bit that this is still expanding to the downside. And we'll look at that on the S&P 500. But also just wanted to point out through here as well. This is the 10 minutes on the Dow, but we can just wanted to point out the volume through here for trading purposes, and because we'll be seeing more of this. And what I mean by that is we can see that I'll do it here so it's simple. You can see that this move down through here and this move across here is on lower volume through here, so it doesn't really have the volume to push it up to the upside here. So that low volume is confirmation that it will come to the downside, and this move down through here has got increasing volume through here, and then it's got low volume through here as well. And you'll notice that these are the levels that we've been talking about. the 11650, an odd number, but it's the 65 number, and also the 72 through here as well, and you know the 118 and the 11772 and so forth. So you know where you are with those numbers. But now we can see that this, as this is coming in through here, we could see the volume diminishing to this point through here, but we're not seeing a lot of volume in this part here. So we know that this is corrective as well. We'll just see this would be a bit of short covering here perhaps, but we've got to increase volume through here. But we'll see this. Let's just give it some time. But we'll see further downside, but we just want to see what sort of bounce that we get off through here. So when we look at the S&P 500, for instance, this is the wave count that we're looking at through here, the same as the Dow. This is the same as the FTSE as well, and we're looking this is intermediate wave 2 rally that we've got up through here, and we've got down for 1, back for 2, so we're in a third wave coming down. In fact, we're in third wave of the bracket coming down from wave 2 here. We're in a big third wave coming down. So, but inside that third wave here, there'll be 5 waves. Then this will be these 5 waves here, and then this will be a third wave as well. So you can see that we're also in a wave 1, wave 2 here, wave 1, wave 2. So we're in basically a third of a third of a third of a third wave coming through here. So this is why we're picking up speed, and we mentioned this as it was unfolding from here, because our shorts were from the 272, the 1250 here as support or resistance, and then the bounce after this here. So what we've been looking for here, if we got this right here, is down for 1 here, back for 2, down for 3, back for 4, and down for 5. So I've just brought that down to the 72 here, but it could be at the 80. This is all subgroup 2 area down here. So we're looking for some sort of rally here for wave 2. And as I mentioned before, wave 2, the normal thing is for the 61.8 retracement level of this structure here, coming back up here somewhere. But you know, we're in a third of a third, so they're going to the rallies are likely to be shallow, because of, you know, they're turning, people recognise the pattern in their own way, and indicators start tripping in and so forth. So we'll see, but we'll see how we deal with this situation here. I doubt if this price will get back up and find support on the 1230 here, the top of subgroup 1. But anyway, we'll see how we go. We were counting 5 waves down, and let's see how we go within our rally here. Oh, that's just the S&P 500 as well. No big deal there. The UK market's the same as well. It's got this same pattern here, you know, the down for 1, back for 2, down for 1, back for 2. In Elliott terms, this market should not come back above this section here, above the 5.5. That's where we're looking to short from it at a retested resistance there. This move down through here, just want to point out that 5.3 is the top of minor group 1. So group 1 in terms of minor would be 5.1, 5.2, 5.3, and the price is becoming will come in here and get trapped in here. The 5.2 is significant. Once the 5.2 becomes the retested resistance, then the price is definitely a part of the 5,000. And if it's a part of the 5,000, then it's a part of the 4.8 as well, because the 4.8 is the first minor level under the 5,000 here. So it is significant. One thing leads to another, and the idea, what we're looking for here, is to be shorting through here once the 5.2 or maybe even the 5.3 gets retested as resistance. We can add a position, but it's the 5.2 that's the central theme here that we want as resistance. The idea was to get short position through here, and one day when the 5,000 is the resistance, then we can look to add to shorts at that point, and then of course under the 5.2, but 4.8. But yeah, the minor group 1 and the 4.8 here, it's their job to keep the price supported to the 5,000 and stuck to the 5,000 this way. So it's really when we're dealing with a level like this, or any level, it's always the smaller levels that are more important, because that's where the fluctuation will be through here. and that's where we'll be able to set up and understand where to enter and where to place stops and so forth. And this will be the same with the ASX 200 as well, basically, because the ASX 200 at 4,000 through here. At this stage here, we understood that this is group 1 here, the 100, 200 and 300. We found no support on here because the breakout's not that important to us, short part of the process, but the retest is more important. It failed to find support up through here, and it's been breaking down, and we understood the internal wave structure here to be shorting at this stage. So it's really a matter of if this is the line in the sand, obviously, and if this becomes the resistance or not. And if that's the case, then we'll be seeing much further to the downside. So straight away we'd need to look at 3,500. Or we could look at the old 2003, was it, the run up from 2,700. That would be the fourth wave of one lesser degree. But as it stands at the moment, this particular move up here appears to be corrective. This move down through here also appears to be corrective as well. We don't have a clear 5 waves down here. So this could certainly be an A wave, an A and a B and a C for the B wave at the 4,000 here, and then a C wave up in 5 waves. So we just, and then roll over from that point. So we don't know what we've got just here just yet, so we need to be a little bit diligent on that. But we can look at markets like copper to help us lead the way here, and this is a daily chart here, and you can see that this move up through here is in 3 waves, so that's a corrective wave. So at some stage that low there will be taken out. Now this being a corrective wave here, maybe just part of the structure, and we have a move down through here and a move back up and then down like a larger A, B and C, and then move down through there. But at some stage that will be taken out, and we consider this a 3rd wave through here. I didn't expect the bounce to be that high through there at that stage. As you know, I didn't think it would get above the 350, but there you go. We all make mistakes, but we're certainly, we're pointing, this market is actually pointing its way to the downside, and now we're in minor group 1 here, so 10, 20 and 30. And as you know, coming into these areas here, we're going to see choppy price action like we did through here, and each of these numbers will have orders sitting here, and that's what gives it support at these close ranges here. So it will be choppy price action, but we'll see how we go. So as this comes into 300, we'll see the ASX 200 come into 4,000. So there will be sort of there'll be supports there. So these will act like a filter and support that market. So that's important. So with corrections like this, that's certainly big enough and ugly enough and so forth. But this correction in this space can double in size. So we'll see how we go. The US market should drive it down further, and we should have that top in oil at the moment that we're looking at, the 103 there. But it's really, we talked about these levels here, from 100 down to 90, we've got the Fibonacci sequence. We've got 8, 5, 3, 2, 1, and the 5 here, the 95, is the midpoint. So once we find this as resistance here, then we can kind of kiss this goodbye at this stage here and start to look down at the 90. Now these are important levels here, as you know, the 98, the 96.50 and the 95 there. So for the bigger picture, we want the 95 to be the resistance. Short-term traders would use the 96.50 as a retested resistance there, but we are looking for an impulse wave to the downside, but we've only got 3 so far. So that wave 1 there that I've labeled could be an A wave, so an A and a B and a C there if I was wrong. So we'll just see how we go here, but it's the 95 that will give us the next confirmation at that point there. The gold market is unfolding pretty much on cue here, and picking up speed here, as you can see. The 1650 here, another sort of, but it's a 65 number, so it's the It's the medium level there. That could be $16.50 on a stock, so to speak, and then we got the 15 down through here. So this has been our target through here. We can see that we've got some sort of we've got support over here, so we'll see a bit of a bounce through here as well in terms of the structure that's coming down through here. It's still unwinding to the downside. This is the 1 hour chart here. You can see the labeling on this on the charts, but a wave 2 up here, then a wave 1, wave 2, then we got 1, 2, 3, 4, 5 for the third wave down here that's not finished yet. So that will be down at the 1650 here as we sort of figuring that down here. They'll be bouncing around here, so just be careful you don't get sort of chopped up here. If you're looking to, you know, if you're looking to trade this now, you're sort of chasing the tail, so to speak. So what you need to do now is you need to allow this to come down, have some sort of type of correction across here. Once it becomes a resistance, then look to trade to the downside down to 1500. But you need you know, you can get a little position here if you want, but just expect corrections across here for that. The same with silver as well. Silver's a little bit different, of course, but we're looking to short it from the 34 here, the Fibbo number here as resistance and a breaking down and all that sort of stuff. And the next structure down, obviously the trading level 3 here. So the 30. So we'll see, we've got little bounce off here. We'll see more bouncing off here, but we can see that there's a beginning and a middle and an end to a trend, and there are different degrees of trends that we're talking about. So we can see that this third wave through here, this 1, 2, 3, 4, 5, that's a little third wave in here. So that would be a fourth wave there, and that would make that wave 1 there. So that would be down for wave 1, back for wave 2, down for wave 3, 4, and 5. There should be 5 waves in there. So if that's that structure there of 5 waves, then we'll also have this one here. This will be down for 1, back for 2, 5 waves down to here, then a fourth wave and a fifth wave down to here. So there's going to be a lot of bouncing around here because there'll be a series of fourth and fifth waves through here. So there's no rush to short silver at this stage. Once silver has moved down through here and bounced around through here and then finds it as resistance, then you can short it again at that stage there, and we can look lower at that stage there. Currencies haven't moved much at all except for pound and our dollar. The US dollar here is sort of making its way, still above the 78, but it still could come lower through here. So just expect that. It should stay above the 77, 72 area through here. But this is a bit of an ugly duckling here. I can see that this is corrective. I can see that that move there is corrective. So we can get a 5-wave structure down through here to take that low out there. Just be aware of that when we look at the euro on the flip side here. Not so much that chart, this chart here. So we were looking at this being, this is definitely corrective. Okay, once it's finished, there will be downside. But the question is that, are we seeing 5 waves up here in terms of 1, 2, 3, 4, and 5 to come up to this little zone up through here and then roll over from that point? That's the question. If this 13472 here becomes the retested resistance, use the 65 to add to the position, and then once the midpoint here, the 50, becomes the resistance, add at that point there and look for short. The size of this correction here in terms of width here should give you the distance to the downside in squaring time and price. The Australian dollar is, there's $1, has moved through that now. And the volume you can see through here is expanding to the downside. So we are seeing more downside here. The important things here are the levels, and 98 is the first level there below the $1 there. So we should see that's still trending down through here and will continue to go down. So you just got to work the 98 here. So within the 98, the levels either side of the 98 would be subgroup 1 and subgroup 2 below. And this is an important one here because this is 97.72. So you got the two sevens there, and you'll see that kick in its own way, in its own time. So yeah, 99, so that's okay. So just coming down here a little bit further into this space here. So once the price is trapped in this area here, this is 98, 10, 20, and 30, subgroup 1. Once the price is trapped under the 20 here, then it's a part of the 98 at that stage. And if it's part of the 98, then it will also be part of subgroup 2 here, because this will become the centerpiece here, the 98, and subgroup 1 will be holding it down, and subgroup 2 will be holding it to the upside. Yep. So, once you know that, then you can short. This correction here is in 3 waves, so that's corrective. So we should start to see a series of 5 waves down for 5, which would be the 1, the 2, the 3, the 4, and the 5 down to here, and then back up through here. This is going to be sort of choppy, so just get your 10 points, your 9 points, and have a look at that money management plan for scalping on the Elliott Wave page. It's under money management up the top of the page there somewhere, and that can be helpful. So okay, that's it. So we will continue to short the ASX 200, and you know that once the price gets down to 4,000, we should see a bounce there. If we have a look at, while we're here, I just want to have a look at the material sector, which would be XMJ. So we can see that just a couple of important things here. The medium level here. So this is the 11,500 through here. So once that will obviously drop down through here once again. But we're under the medium level now, and this is where the market was sort of got overlapping wave structures, so it's corrective and struggling into the supply zone through here, and now the 11,500 will become the resistance at this point through here. So what that will do once that rally is complete there, hitting that supply there, like this supply here hitting this supply, even though that was down further, then we'll see this market move further down towards the 10,000. This is important for the whole material sector, really. The 10,800 is important as well. We could also view this in another way. We could view it from BHP in the US as well. So we've seen it drop through. We've seen it retest the 80 and fail at that point. We've seen it come through the 98 and the 78, and now the 75 through here, and now the magic 72 number. 7 has got to do with time. But now we're at the medium level down here at 65. So while this price is above the 65 here, we could still have a larger correction here in terms of an A and a B and a C wave back up to here, yeah, and then roll over. So until this price is finding the 65 here as resistance, then a larger bearish picture would unveil. But while it's above the 65, yes, it is bearish and so forth, and it will stagger down in line with the US markets and so forth. But anyway, the levels are they're just degrees of strength and weakness. So we know that the 80 is the main point here, and that's failed. We know the support, which is the medium level, which is the next degree down, is important. But if it finds itself as resistance, then we know where we are. We know all the little levels in here, the 72s and the 75s and things. So just degrees of strength and degrees of weakness, and we're dealing with degrees of weakness here, and we need to see how these are tested, but more so what the rallies are. So any bounces off through here on the ASX 200 or BHP and Rio and so forth, then it's pretty much sort of doomed. And it's nice to work with resistance as well. So when we're looking at resistance in terms of stock, just thinking of FMG here, it's just nice that you can see that even though that we're short on this stock here simply because it's under the 5,000 here and it's struggling. But if it came up here and found support, it's okay to spike up there really. But to in like in this case through here it's okay to be above it, but to find support on it is another thing. So you don't always have to panic. I think we've got our stop at 507, which is probably bit naughty. We should really have it at sort of 513 above the 510 because that's where the orders will be sitting there. But anyway, that should be fine by today anyway. So we'll see a breakdown, but basically using the levels through here and also checking out the volume as well. So the volume on the uptrends compared to the downtrend. So is there more volume in the downtrend and less volume in the uptrend? That's what you kind of need to look at, and that's a sign of weakness at that point. Alrighty, well, we'll continue to get a few more short trades on the market. I won't put a lot out, just a nice mix, sort of half a dozen so of different prices and different sectors, because we've all got our favourite terms of pricing and so forth. But there's no need to put out vast amounts of trades, but a nice variety so that you can choose. And sometimes if you're using the robo method, sometimes you just you think one will move more than another, and you can do all the right checking on things. Yeah, it's a bit of a box of chocolate, but there's some things that we can look at in terms of looking for shorts. If we just have a quick look while we're here, and let's see what we've got here. I'll just turn off these for a second, just as an example. So we can see this stock here. This is okay, whatever it is, just as an example, because we can see that $3 is the major trading level there. We can see that if we were going to robo this stock on the open here, then we can see that yes, it's below the level here, the 3, so that's good. It's got support at the 280 here. That's the minor trading level. But it's under the major one, so we can get a point for it there. The closing price is lower than the opening price, and we're on more volume here, so we've got more of a down bar here, but there is buying here because we can see that that's pushed up through here, so that there is buyers there. This is where you need to look in the market depth to see what's there. So this is a bit of a buying bar here as well. We can see that the buyers are in there. So let's have a look at this is a good stock because we can see that it's closed on its closed on its low, and we got more volume on this bar than we have with the previous bar. Okay, so that's a bit of a go. So, but at 90, you could imagine this is right on 90, the medium level here. So you'd want to put it. There'll be buying orders sitting there. So you really want to have those buying orders moved out of the way. So you'd go at 89.5 because all those buyers will be sitting at 90, and there'll be buyers at 88 as well, but you don't have to worry about them. So clearing the support out by putting the sell order at 89.5 would be good on that one, but that's good. Closing on the only problem with this is it could gap. That's the problem when the US markets are down more than 2%. So, if the US markets are down 1% or up 1%, the robo method is perfect because then it will just sort of open and trade off like it did there, That's not much chop. This is interesting here because this bar here, where I think we're actually short on this one, this 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 bar is closed above its opening price, but you can see how it's on lower volume than the previous down bar. So what it's tried to do, it's tried to go up on lower volume, which is basically just thin air. So yes, we know that there's support there coming into this area here, but uh, yeah, it should fail. So then you just look at the price between $15, the medium level, and let's just say, well, 13's the next one, but 14 we can look here. So between 14 and 15 here, what would be the most important level here? So we have to go down to the sub-levels. So of course the midpoint would be the 1450 here. So once 1450 becomes the resistance, or you can see the orders in the market depth building up at 1450, then you're on your way to the downside. So then it would be the 30, the 20, and so forth, and there'll be a lot of bouncing around there. But you can accommodate that bouncing into 10, 20, and 30 of subgroup 1 of 14 once you know that all the sell orders are being moving down and they start building up at 1450 there, creating that resistance there. So looking at the volume here, so even though it's up, you know, if that volume bar was more volume than that day there, then we would have a problem there and would be seeing further upside. But that's lower volume, so that's not much chop there. Trying to find a stock that moves reasonably well. You know, things like this as well. We talked about the Dow Jones today on having, you know, it would move down and move across on low volume. See that low volume there? So that market's only going to go one direction, and that's down. But once again, you've got the support there of $1, so that's the trading level there. So you really want to be under that, but that's fine. But you know, so you're just using the volume, the levels, the price bar to find sort of trades. This is a corrective pattern through here because we've got that three-wave structure up there, but you can see the overlapping wave structure. This is a whole corrective pattern through here, and we got the 150 there, so we wouldn't short that now, I suppose. We're already shorting that from back in here somewhere once we were under that 150 there, so that was the medium level through there, and you can see that makes a bit more sense when you look at it there. So we were short in here somewhere, but based on the medium level here, we could see that the price had got all these lower highs through here. We could see the bigger picture here was corrective. So we'll do the robo method through here, and yes, we will get stopped out somewhere through here, but big deal. But this whole correction here eventually will take that low out there, because this is a correction with overlapping wave structures. So, and it's a continuation pattern. So it's continuing in this direction, the same as that was in three waves there. Once it's complete, it will continue. The same as that's a correction. Once it's finished, it will continue. The same with that and that. And this is the same as well, just different degrees. This is a nice three-wave correction through here. And yeah, so anyway, just thought of waffle on a little bit there. So you need to find short trades that you can use. The level is number one. That's because it's kind of look at 5 points. We look at the pattern. If you can understand the pattern, that's 1 point. If you can look at the trading levels, that's another point. If you can look at the price, the opening and the closing price, that would be 1 point. And looking at the volume would be another point. So all those points are quite simple, and they all add up to being a trade. But even when you get something that's got 5 points there, you can have a bunch of trades that got 5 points. Then you can also have a look at what was leading the Dow down last night. So it's the financials. So you can look at the financial section. So if we look at go to that section, that's where the lead will be coming from, as long as the gaps are not there. This is could be a nice trade here. First of all, it's the trading level. This is BEN here, but the point is here. There's the support. Okay, it's at 90. So going short above support is dangerous. Okay, so you'd really need to have the trade at at just below the $99 there, because all the buying orders will be sitting in there. So $8.99 should clear them out. $8.98. There'll be orders at 98. So 97 would be a nice figure there. We could see that that bar was up. This bar was lower, but it was on lower volume. So that's a supportive thing here. So you need that to move out of the way there. Let's have a quick look here at some others here. BOQ, that was up on higher volume, so that's supportive as well. So that's not what we want. ANZ. So ANZ has moved through the 20 now, which was our target because we've been short on this, and it's got further to go down, but it's moved down through here, but on lower volume. So that's kind of it's not increasing volume, so it's not going to. I mean, it will go down because of the financials last night, but just generally speaking, that shorter bar here compared to that one is this trend slowing down through here. So yeah, so once it slows down and the retest comes back up here, then you can short it from that point. But we can see that certainly coming to the downside. So this ANZ stock here, we can see that this is in 3 waves here. And in fact, that's an A wave, a complicated B wave, and then a C wave up here in 5 waves with the 1, the 2, the 3, the 4, and the 5 in here. So if this is in 3 waves here, eventually that price there should be taken out. So that's the good news there. Alrighty, well, that's enough. Good morning and good luck.